Have you ever considered the idea of picking up day trading or swing trading? Have you thought about the lifestyle you could have if you struck gold with stock trading? Maybe you've considered opening a trading account or have even attempted to day trade stocks. I certainly have, and let me tell you something. Don't do it. Why? Over 90% of so-called day traders end up losing money. Want to know something even crazier? Over 78% of fund managers can't even beat the market on a consistent basis. So, what gives? Are stocks not the way of the future in terms of investing? Quite the opposite, actually. The stock market is a powerful tool for wealth creation, yet trading stocks is a risky endeavor that shouldn't be taken lightly. Let's take a closer look at why people lose money in the stock market and what you should do instead. The psychology of trading. Trading with fake paper money in a simulated environment is easy. You can quote-unquote borrow as much as you want and can trade whatever your heart desires. If you lose, no big deal. Now try doing that with real money. We could potentially lose everything. Your mind will work differently. The nonchalant attitude that you had with paper money is completely gone, as the stakes are high. One wrong move, and you've lost money. While it is expected to lose money, people don't go into a trade thinking they'll lose money. A stock will start to pop up, and day traders will get greedy and buy into a position thinking the stock will go up even more. Maybe it goes up a little bit, but then it starts to come down. The trader is now in a loss position and is dangerously close to hitting their stop loss. Do they sell early? Do they ride it out? Do they add to their position? So many questions that need to be answered in a split second. Many people don't realize this, but their own cognitive biases mess with their strategies all the time. A cognitive bias is a systematic flaw in one's thinking that can cause them to make a wrong choice when they invest. An example would be if an investor saw some new cutting-edge information about a particular stock. They may try to warp that information to match their expectations for a particular stock. Let's say you're feeling good about Amazon stock. You start to read articles from economists and other traders that also feel good about said stock, so you load up, thinking that everyone is expecting the same thing. This confirmation bias inhibits you from looking at potential drawbacks of the stock, which could lead you to holding onto a position that's in the red, hoping that it'll come back out. With so many different biases affecting investors, it's no wonder that day trading is so dangerous. So many people aren't emotionally prepared to handle the stress of day trading. There are so many moving parts with the buy and sell prices, chart readings, and the speed that the market can move. Many people overstate their confidence in themselves to predict market movements and think they can time the markets just perfectly to land big gains. If you seriously think you can time the markets perfectly, think again. The market is unpredictable and will swallow you up in a heartbeat. Speaking of unpredictable, that leads us into the next topic. Market volatility and risk. As mentioned before, the stock market is a volatile place to do business. One minute you can buy a stock, and the next minute you can be up or down. With the amount of dollars being traded on a minute-by-minute basis, it's impossible to predict where a stock price might move. Trying to time an entry and exit for a stock is just not realistic, even with the most advanced computers and fastest networks. Another thing that people need to be mindful of are black swan events. These events are rare and go against the grain of what is normally expected in the stock market. These events can also cause huge economic ramifications, such as the pandemic in 2020 and the Great Recession in 2008. No one could have predicted these events, yet they still happened. People can think that they could have predicted them by looking for patterns in prior events, but the reality is that no one knows what will happen next. Let's say you had $1,000 in a particular stock and had the expectation that over the course of a few weeks, you'd expect to have a balance of $1,200 in the stock and you could exit the position for a $200 gain. You could have done all the research on the technical analysis side and researched the fundamentals of the stock until your eyes crossed. The reality is that one black swan event could wipe out your entire position in one day. No amount of analysis can predict an event that happens suddenly. Is it worth the risk to you? For some, $1,000 is an accounting error and not a big deal if the stock goes down that much. For many other people, that $1,000 is all they have in their portfolio. If that's the case, I recommend doing something else with that $1,000 that will get you somewhere instead. I have a video on how to invest when you have little to no money. Go check it out. transaction costs and fees. Now that I've scared you about the risk of losing your money to unpredictable events, let's look at transaction costs. Regardless of the brokerage firm you choose to do your trading in, they will charge a fee for you to buy and sell stocks. Some firms may not charge you a lot, depending on the volume of trading you're doing, but there will be some kind of fee. Now, assuming you're making 10 trades a month, if each trade costs you $5 to execute, that's $50 of fees that you have to pay. If you do high volume trading and make 200 trades a month at $1 a trade, it's $200 in fees. It may not seem like a lot, but you have to make sure that your trades are making enough to cover the fee. It can quickly eat away at your returns, especially if your brokerage firm charges more per trade. Not only do you have to worry about trading fees, but there are also taxes you'll have to worry about. Depending on where you live, your government might consider your trading activity as income and not as capital gains. You might be subject to a less desirable tax situation. You might try to combat this and trade within a tax-sheltered plan. Good idea? Not at all. There are many cases in Canada where people have tried to day trade within a tax-sheltered registered account, and the federal government called them out on the trading activity and charged massive tax fines. If you think you could get away with it, don't even try. It's a losing battle. With the fees associated with day trading and the potential for a higher tax bill, stock trading on a regular basis just doesn't seem worth the cost. Alternate investment strategies. If you're wondering what the best strategy is for stocks, look no further than the greatest investor of all time, Warren Buffett. His approach is quite simple. Find high-quality companies with a stock that's on the discount, then buy it up and hold for the long term. This way, there are fewer fees for trading, and the tax advantages are greater. Better yet, find a good stock you want to own, then use the concept of dollar cost averaging and buy little bits of the stock each week when you get paid. This way, you can build up your stock holdings and ride out the dips of the stock. Don't want to do research into different stocks? No worries. Find an index fund or mutual fund that aligns with your long-term investment goals, then implement the same dollar cost average strategy for that. You don't have to research stocks, worry about portfolio balancing, and other issues that come with stocks. Just buy the fund and let the portfolio manager take care of the rest. Another advantage of mutual funds and index funds is that they're already well diversified in different stocks, industries, and asset classes. This will reduce your overall risk in your portfolio. If you're looking for more on building a sustainable portfolio, check out my video on the 5 stages of building sustainable wealth. As you can see, trading stocks is not something I recommend. Yes, I do own some stocks, but my strategy isn't to day trade. I buy stocks that I like, then I hold them to reap the benefits of the growth. I hope you are more aware of the risks with stock trading and will reconsider your investing habits to more align with your long-term goals. If you found this video helpful, then be sure to check out my video on the 6 steps to survive a recession. Thanks for watching, and I'll see you next time.